Today, let's talk about this wave of layoffs. Tech companies are cutting jobs, financial companies are cutting jobs too. The real question is this just a normal economic cycle, or is something deeper going on?
For programmers in particular, the impact feels especially real. Let's start with a few numbers. In April 2026, Meta announced about 8,000 layoffs, roughly 10% of its workforce. Microsoft also rolled out a voluntary buyout program affecting around 8,750 U.S. employees. The timing of these moves says a lot. This is not just about cutting costs. It looks more like companies are reshaping themselves for what comes next.
At the same time, several other tech companies have also kept reducing headcount. Based on public estimates, the U.S. tech sector has already seen more than 90,000 layoffs in 2026, which includes the layoff plan of Oracle, Amazon, etc., and nearly 900,000 in high-tech industry over the past few years. So the big question is this really just a weak economy? My view is, not exactly.
Sure, there is a cyclical side to this. Slower growth, more cost pressure, and a market that now rewards efficiency more than expansion all matter. But if we treat this as only a bad economy story, we miss something bigger. A lot of companies are actively shifting money and headcount toward AI, automation, and a leaner organizational structure.
And the people getting hit are not just low-skill workers. A lot of brain work is under pressure too: engineers, analysts, HR, content reviewers, customer support, operations. In other words, this is no longer just one industry's problem. It is changing how many companies decide what work actually needs to be done by humans.
A simple example is banking. When you go to a bank today, there are far fewer people behind the counter than there used to be. More work is done by ATMs, self-service systems, and digital workflows. It's not that banks suddenly became unprofitable. It's that the service model changed, and part of the old workforce was replaced by a new system. What we are seeing in tech today follows a similar logic, only on a much larger scale, and at a much faster pace.
Anthropic's CEO Dario Amodei has also raised a similar concern. His point is that AI is not just affecting edge cases or peripheral jobs, but cognitive work itself. That does not mean the outcome is set in stone, but it does suggest that AI may create not only short-term disruption, but long-term structural change.
If we zoom out and look at history, every major technological shift tends to create a kind of job vacuum. Old jobs disappear quickly, while new ones do not show up at the same speed, even if they eventually do appear.
The dot-com bubble is a classic example. Around 2000, many internet companies collapsed, and related jobs disappeared just as fast. But in the years that followed, new roles and new business models gradually emerged: search, e-commerce, data analysis, product management, platform operations, and more. The problem was that many people who lost jobs during that transition did not move into the new wave smoothly.
Often, it was a younger generation, or people who adapted earlier, who captured those opportunities. The electrification era followed a similar pattern. In 1882, Edison's Pearl Street Station began operation. At first, its coverage and customer base were very limited. But as electricity spread into factories, cities, and homes, it reshaped the entire production system and even urban infrastructure.
That eventually gave rise to new industries like electrical engineering, industrial automation, home appliances, communications, and city infrastructure management. The real issue was never whether new jobs would appear. It was whether the existing workforce could adapt fast enough to the new system.
So if you put these changes together, a familiar pattern starts to appear. First, efficiency improves, and the old system starts to look outdated. Second, organizations restructure, and old jobs disappear quickly. Third, new professions and new divisions of labor emerge, but they look very different from the old ones.
That is why a lot of people feel the pain of technological progress before they feel its benefits. Job restructuring usually happens faster than new roles mature. And that gap in the middle is often the hardest part. So will AI be different this time?
I think AI is more likely to redefine the shape of work than simply create a fresh batch of jobs. In the future, we may see roles that do not yet have standard names: people who design AI workflows, coordinate human-AI collaboration, or review the quality of AI outputs. These roles are already starting to appear, but they are not yet fully standardized or widely recognized.
So, back to the original question, is this wave of layoffs just a cyclical downturn, or is it something structural? My answer is, both. But the structural side is becoming more important. This is not as simple as companies are profitable but still laying people off. It's about businesses reorganizing themselves to do more with fewer people. AI is speeding that process up and making the shift more visible.
What really matters is not the layoff numbers at any single company, but the bigger change underneath. The shape of work itself is being redefined. In past technological revolutions, the production system was rewritten. This time, with AI, what may be rewritten is cognitive labor itself. In the next episode, we can go one step further and ask a more concrete question: if AI really enters a phase of structural substitution, which jobs will be affected first, and which ones are more likely to remain safe? Please leave your comments. Subscribe BWS channel and see you.